Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York on Tuesday, 16th day of June 2015, and this is Trending Markets. We do have a substantial rally going on with the equities markets in the United States just closing. We had the Dow Jones Industrial Average close up about 113 points, just shy of 18,000, 17,904, a substantial rise in anticipation of rate hikes being announced tomorrow as the FOMC meeting, which got underway today, comes to a conclusion and we have a press conference. Of course, that's going to be the topic throughout this show. We'll look at some of the currencies as well as oil and give you our current take on these markets. Considering that the stock market in Greece closed at a 2.5-year low, there's absolutely no doubt. And according to Yellen, the U.S. economy seems to be rosier. Those are her words, not mine. In terms of some of the remarks already filtering out, Yellen did mention that in terms of Q1, the first quarter, those shortfalls were temporary at best, weather-related and other issues that shouldn't pop back up. And as I said, they are looking at an economy that seems to be vibrant and picking up. The importance of that is that the Fed has said, they are on record saying that rate hikes in June were currently in play. We're now in June. The conference is today. The announcement should come out tomorrow. Now, as far as I'm concerned, it has never been a matter of if, but when, and more importantly, how these rate hikes occur. In other words, the increments, and I believe they will be extremely slow and extremely steady. They certainly do not want to shake up the markets at this point. When we look at the US dollar, for example, that is currently trading up, although up nominally at 94.93. As you probably know, one of the primary reasons in developing trending markets was to present opportunities to our traders from the gold forecast to allow us to really hop on defined trends, trends that are not sideways markets, trends that are readable, actionable, and most importantly, potentially very profitable. I think that one of the first plays that we're going to be making is going to involve the euro as well as the US dollar, because those have some really strong defined trends. And when we look at those trends, I believe that we have an extreme opportunity to profit from them. The first thing that I do want to look at is the euro dollar today, and to look at it in the confines of our long-term trend as well as our present market scenario. Of course, we talked about this yesterday. This is 140, and our long-term trend has definitely been down as this market went from 140 almost to parity here at 105. We have a counter wave that comes in here. When we look at that counter wave, the question is, where will that end and where will we see a resumption of lower pricing? One of the indicators that, of course, we look at is the MACD, and we've had this upward movement in the market. We've got this small correction which coincides right in here, and we're back up in an upward trend. But I absolutely am under the pretext that this upward trend is a counter trend, and we want to catch the pivot point in which we can go ahead and initiate a short position. And what we want to look at is exact timing to give us the greatest opportunity with the least amount of risk. And right now, here's my current thinking about the euro dollar. We've put up our current Elliott wave count. And when we look at this, we have our long wave 3 down. We talked about this a little bit yesterday. I absolutely think that we've hit our mark in terms of the top of 4 here. When we look at our big picture, we've got our A, B, C correction. That C correction finalizes or concludes this fourth wave. I believe that our current market scenario is we've just now entered our fifth wave. That fifth wave, of course, is going to be down. And according to Elliott wave theory, if we're looking at the lows of 3 at almost parity at 105, my sense is that this is an opportunity for us actually to see this market track to anywhere between 105 and parity, or dollar for euro being of equal value. Taking that into consideration when we look at our shorter term moves, assuming that we have in fact concluded wave 4, we are now back into wave 5. Wave 5 is going to be obviously a down wave, but it's going to consist of a 5 count. We might be looking at something like this. We've just seen wave 1, that's been complete. We're here at wave 2. We'll get our wave 3 down. Of course, our wave 3 down will really be confirmed if and when we see this market move below 105. So based on that scenario, and taking into account where the market is currently, as I said, in terms of a intermediate count, R1, R2, I believe we're probably headed into 3. And so this is the area that we're currently at, that as a high risk trade, I certainly recommend shorting the euro dollar. If in fact you go and short the euro dollar, you're going to want to place a protective stop. 113.90 is the most recent highs, 96. So you'd want to place it at 114, 114.05 in that area. But my recommendation is to, as a high risk trade, is to sell the euro at the market, putting a stop at 114.05. Now, the reason that I am labeling this a high risk trade is with the current scenario in Greece, June 30th, of course, that's the big day when payments are due, but there are some meetings that will take place on Thursday, I believe. Over the weekend, there is another set of meetings that are going to be going on, and what comes out of that is going to obviously affect not only the global stock markets, but will affect in particular the euro dollar. But my sense is this: if we have a strong US dollar, if we have a strong rally in the equities markets here in the US, and we have any kind of uncertainty in regards to the Greek bailout, then we should see lower euro dollars. At the same time, if the resolution is a non-resolution, meaning they go ahead and kick the can down the road, that to me, although short-term could be bullish for the euro, I really don't think that that solves the problem in any way, and I believe that that also could put pressure on the euro dollar. So I really think that at this point we will see lower pricing in the euro, and therefore my trade alert and trade recommendation. So another market that I absolutely want to bring back into the mix is crude oil, because crude oil, when it does trend, has a tendency to have substantial moves in the market and therefore substantial opportunities for profitability. My sense with oil is we are currently trading up at about $60. I think that 70 is going to be our top end limit, and I'm also looking to sell crude oil, but I don't think we're necessarily at that point. However, we could be very close to that point, because when we look at our current Elliott wave count, there's no doubt this market's been down. We're in a bear count here, waves 1, wave 2, wave 3. Wave 4, though, our system hasn't identified it as a top, but if you look at these 3 levels, we've absolutely hit these higher levels in terms of just at around 60. If in fact we see that unfold, we should get lower pricing, and we should get a low that goes below this current low here, which I believe is at about 58.50 in terms of price per barrel. However, when we look at our MACD as well as our stochastics, we're definitely going into overbought territory, but we haven't really triggered any kind of a sell yet. This is a market that we are going to be looking at, and we're going to be looking at, I believe, the best play is from the short side. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another Trending Markets. Bye-bye.